Good morning, guys. Welcome. Welcome. Welcome in. Surprise giveaway? No. Okay, surprise giveaway? Hell no. Welcome in, guys. Uh, Yesterday, definitely some dramatic action, right? Not clean, right? You're not going to see me at the dealership after yesterday. For me, yesterday I was quite difficult. I feel like it was the first day where it's like, oh shit, maybe they're throwing some that they threw some monkey wrenches around, right? And look at right now. Look what you're seeing right now here in PPI. PPI final demand coming in, and you are seeing some reactionary downside moves. You know, we expected the pullback yesterday. I actually had shorts here, right there, and that red candle had shorts, and I sold there. I ended up longing here at 644 and got stopped out. So I had a good trade yesterday. I had the winning trade yesterday, and then I also had a losing trade yesterday. So I pretty much nulled out almost exactly in a break even yesterday. I think I made like $100. Probably after commissions, I probably made nothing. Yesterday's action was the first day where, you know what, we did pull back to demand. You did see some holds off gap fill levels, but look at what's going on here, right? I mean, we have to get a read of what's going on and see maybe the market needs these deeper pullbacks to our critical demand zones for us to go higher, right? We have to be open to these pullbacks, and we have to look to see where these pullbacks are going to come into. Anyway, I just looked at my mic and I thought my mic was muted the whole time. I was surprised nobody was saying anything to me. So we're going to talk about this, guys, today. We'll talk a little bit about what's going on here in the pre-market session. We'll go over everything that I'm seeing. Of course, right? Market pullback, right? PPI data coming in, and we're going to go over it. Right? Obviously, you guys probably know what the data is. Data right now, just so we all understand it, I want to announce it right now. Wow. Wow. I mean, that's hot. That is not good. Okay. PPI inflation for July rises 3.3% versus the estimate 2.5%. I'm not an economist, but that's bad, right? I mean, it doesn't take a genius to understand that shit. That's bad, right? It's pretty bad. Okay. Market's reacting lower here. It's not that much, but PPI data coming in a little bit hotter than expectations for producers. Okay, so we're going to talk all about it today, guys. We're not going to be economists here. We'll talk about charts. Data looks bad, right? I'm just going to say it right now off the gate, right? Data looks really bad, okay? We're going to go over it, though. We'll talk about what's going on here in the SPY and where I think market has to pull back to at this point, right? And I think we probably do get these pullbacks after this reaction pre-market and the data that's coming in. Pullbacks probably seem to be the most probable scenario. So let's dive into it. Welcome in. Welcome. How's everybody doing? Did everybody have a good day yesterday, or did you have a tough day yesterday? Welcome, welcome. I'm gonna get some hydration, and then we'll dive into it. So, cut a little bit short. Yeah, it was tough. It was tough for me too. It was not easy. It was not an easy session. I feel like we've had like 2 weeks of easy action, not easy action, but like good action, and then yesterday was like wow, it just was frustrating. Yeah, let's go. Let's move. We have a lot to go over today. So first of all, giveaway complete. I think I paid out everybody. There was I ended up adding 2 more people to it, so we did 6 people in total. We had 4 initially. I ended up adding 2 more people just because I did 6 last time, so I ended up bringing some more people. I think there's 1 person I'm missing. But if I am missing you guys in the giveaway, make sure you message me on Instagram, and don't message me if you're not one of the giveaway winners. You guys know who you are. So don't DM me an IG saying you won but you didn't win, because I had about 10 of those yesterday. So just understand this. I will do giveaways again in September. That's in 2 weeks. So in 2 weeks we're doing another giveaway. I'll give away another $500-600, whatever it is. every someone said you're missing me. Every month I'll give away probably these $500. Okay, as long as I'm making money on YouTube and I have people liking the channel. How many guys are liking the channel right now? First of all, how many likes do we have here? 46 likes with 770 viewers. Pretty bad, but let's get that up. All right, so guys, SPY. So SPY chart obviously moving down lower. We're reacting to data here. Market's moving down back into demand. We're going to talk about it. This demand right now is the previous all-time high. We have labels here. Ready for this? Bam. We have labels and everything. So we're going to go over all the labels on SPY and we'll talk about what's going on here. What happened yesterday. We'll also go over sort of what's going on pre-market. We'll go over the Q's chart. QQQ. I mean, really, yes, first of all, ES is going to be a pivotal chart for us. Why? Because 6,500 failed yesterday, right? This was our new level, our new critical level. This is our key supply zone, right? We've just found ourselves the new key supply, 6,500 ES. This is the Megatron. We found the Megatron level. It's 6,500 and it's staring at us right in the face this morning. Okay. So this is going to be a chart we probably have on our chart for a few weeks in a row. 6,500 ES. Let's keep an eye on it going forward. We'll talk about that in a minute. We'll go over SPY. We'll go over AMD, a little bit of AMD action yesterday. This was nice, right? If we traded SPY yesterday, tough, right? But look at AMD. AMD 180. This was actually a beautiful trade yesterday. The break and retest of 180 for upside. Like these are the type of trades you just take. Okay. Now, granted, I'll be honest with you. I didn't trade this. I actually just didn't trade this. By the time I was willing to trade AMD, I was already like, you know what? I don't want to risk anything today's session. I want to come back into Thursday with a good mindset. So I didn't even trade this. But to be honest with you, this was a trade I probably could have taken. 180 break and retest, beautiful breakout, retest, pullback long, upside explosive trade back in high. So beautiful trade here in AMD. We'll talk about AMD today. We'll go over what's going on this chart in front of us. We'll go over Nvidia. We'll talk about Nvidia. I mean, this is going to be an interesting chart because we know that this move is going to be big when it breaks. It's either going to be big on the downside under that 179.5, or it's going to get aggressive over 184. I mean, we just developed ourselves a very clear channel lows and channel highs. So we are going to discuss this Nvidia chart in a few minutes, being a very important chart for our trades today, because we know if we see Nvidia breaking down under key levels today, we know where the market's headed. It's probably headed lower. Okay, so we'll go over this chart here in a little bit here on Nvidia in this beautiful channel. We're going to go over Tesla under 338. We'll go over Meta back under that level. What's happening here in Meta is a wham-wham. Okay, this is your textbook wham-wham, except not in the way you want to see it, right? This is a short wham-wham. You have a lot of longs that just went long over 785. And what happened yesterday? Those longs that went long over 785, they are underwater today. They are dead fish, they're beached whales, and this probably goes down lower. So we are going to discuss this Meta chart today as a key chart as well, because of course Meta is going to be a key player in the market, right? So, but that being said, let's go into our econ data. We'll dive back into our charts, and we're gonna have a really nice pre-market session. So, okay. In terms of our economic data for today's session is all centered around PPI. So PPI final demand has come in this morning. It has come in elevated. We'll go over the data in about 30 seconds. We also have some other data today at 10 o'clock. We have a Fed speaker. At 10:30, we have some routine data. And at 11 o'clock, we have the 20-year bond auction. So be careful of the 20-year bond auction. Bonds have actually become an interesting release recently because market has been watching it for whatever reason. Just be careful of the 11 o'clock data. Don't worry about it. Just understand 11 o'clock, you'll see some reaction. Okay, you probably see a 50, 60 cent move on SPY at 11 o'clock. Okay, you don't want to be caught in a crazy candle, right? On Friday's session tomorrow, pre-market, we have a series of data at 8:30 a.m. We have retail sales, we have business inventories, and consumer sentiment at 10 o'clock. So we'll go over that tomorrow as we jump into it. But today's session on the Market Watch calendar, I want to just go into this for a second. Just so you understand this, we had CPI data on Tuesday rather. Today's Thursday. Tuesday, we had CPI data. CPI data came out better than expectations. You guys remember that, 2.7 versus 2.8. Market reacted strongly, positively because of this release. Now, Wednesday session was yesterday, and Wednesday session was a shit fest, right? A little bit up, a little bit down, right back into demand. And this morning here, Thursday, we have core PPI or our PPI year over year. And this is coming out way over expectations, right? So if you just zoom into the number here, the actual number was for PPI, it was 3.3. The expectations, which Market Watch is not displaying to us, but the expectations for our PPI data was, and I'll just get the number for you just so you have it, was 2.9. I'm seeing different data right now I'm seeing different data all over the place. But July PPI was 3.3%, which we're seeing right now. And the expectations were 2.5%. So don't quote me in this, but that is what I'm seeing from News Squawk. Again, the estimate on our Market Watch calendar is not displaying, so hard to confirm this, but I think that is correct. Okay, let's just be aware of the fact that this data is bad, and you're probably seeing some more reaction to this on SPY. Okay, let's go over SPY chart. So on the SPY chart, let's not be economists. Let's just focus on levels today, because we have seen time and time again, bad data does not always correlate to crazy downside. There are some times where bad data does the opposite of what we think. Okay, so let's just focus on charts. That's going to give us the best read of today's session. First, let's talk about what happened yesterday. So yesterday's session was a supply rejection. Okay, and we knew that yesterday the only way to go long yesterday's session was to go long at pullbacks, right? So our discussion in pre-market on Wednesday was, hey, if you see the market fail, which 646 was a key level and that 6,500 was a key level yesterday, you can go short at key levels, but only go short as far as demand below. And so where I went short yesterday was 646. I took profit at 644.80, I think, and change. I sold here. I ended up walking away for a small gain. I think I made 15% on this. And then I ended up flipping back long right here. I flipped long right here in this little range under that little pre-market low and pre-market high. I went long right there and then got stopped out over there for the same amount of money I won in this trade. So that was my day yesterday. A little bit of up, a little bit of down. And now going forward into today's session, you're seeing, First of all, you saw some demand step in yesterday at some key levels. We had our Tuesday level here, which was conveniently our gap fill level. So what I mean by that is technically in the market yesterday, we gapped up higher. So we gapped up higher in the market. We pushed a high here at 646, and we just pulled back to that previous session high, the PDH, which was in this case 642.50, which again was our gap fill level. And you find this time and time again, that anytime the market gaps up in the market, a little bit gap up in the pre-market session, we do tend to pull back to our gap fill level and reverse off of it, right? So this again was just another textbook example of that. Again, if you caught it, congratulations. If you didn't, well, it sucks, it happens. Now moving forward into today's session, we've now gone under our gap fill level, which was our PDL being Wednesday's lows. We've gone under our Tuesday's highs, our 642.50 level. And we are now finding support at the next key level. So remember I said that we had all these key levels below and to look for longs at all these key levels below. And the levels we discussed yesterday were Tuesday's highs, 642.50, 641.50, previous all-time highs. We have a break at level 640 and the previous all-time highs here, 639. We have a whole bunch of levels to go long off of on the market. Now the question is, which one do you work off of? Do you go long off of all of them? The answer is no, you don't, right? Like we said yesterday, you want to look for confirmation off levels and then go long when you see confirmation. This morning, you are seeing us actually confirm off of one of our levels. Our demand zone right now is 641.50. And trust me, I see the bad PPI data. I see it coming in. I see the bad PPI data. I see the reaction to PPI data coming in. But again, we've just pulled back to a key demand zone. Let's just zoom out for a second, right? Let's zoom out for a second and let's understand where the market flips back bearish. So we are in this beautiful little ascending channel here, right? And you see supply rejection coming in off of our golden zone here, 6,500 ES. Where does the market actually flip bearish? Where do we have to become worried? If you just zoom out for a second, you're going to see the level that we must maintain going forward is 640. If we lose this zone right here, 640 to 639 low right here, this is the long spot in the market. This is the major long spot in the market. If you lose this level, 639 to 640, then I am worried about going long and I don't want to go long the market, right? This to me would be my sort of factor, my reasoning to say, you know what, let's not long every demand anymore, right? So if I see this type of action happen today post PPI, and we'll draw it out so you guys can really understand it. Where's my draw tool? Right here. If I see us, obviously we're holding trend, holding trend, holding trend, holding trend, and then we pull back to 640. Let's just say we bounce off 640 again today, which would be a bounce area for me. If you lose this level, right, we bounce off of initially, then we lose it, then I no longer am looking for longs anymore, right? Because again, if I see this happen, then I'm going to begin to view this as a downtrend and I'll look for a move down lower. As of right now, though, I'm seeing PPI data is bad. I know it. I see it with you guys. The data's high. The PPI numbers are high. Inflation's hot again, right? But look at what's going on here in SPY. By no sort of analysis is this bearish yet. Okay, so we are still bullish. My mindset would be let's look for longs back at these key demands. My key demand to watch out for today is either really just this whole zone between 639 and change to 640 and change. This zone over here, this pocket between my yellow and red levels is where I plan to go long today. If we lose these levels, then don't go long. If I see the market do this today, right, bam, flush right underneath it, right, then just don't go long, right? But if I do see us begin to form a base here, then go long, identify stops, and look for an upside trade. And if it doesn't work, then go short. As you lose on that trade, if you get stopped out, go short back under 639 and look for downside back underneath it. As of right now, though, look for longs at 639 to 640. It's still a valid long spot. If you lose it, then we no longer go long anymore. Okay. On the ES chart, on the ES, it's the same deal, right? You see this chart here. You see the big level at 6430 ES to 6441 ES, major levels of good demand. Move my head. Yes. Hold on a second. Nobody told me my face is like huge. That's crazy. You guys got to tell me. You guys got to tell me this. My face is blocking everything. Okay, so we're good now. All right, 6430 ES, 6441 ES. That's our key demand zone today. If we can pull back to this today, if we see it pull back to our demand zone, this is our long spot. If we lose this golden level, then we obviously fell back lower. Longs are no longer valid, and we move back into 6400 ES. That's where we're going to. As of right now, the levels are still holding, and let's look for pullback longs. And even so, even this 6460 level is still holding. Where is this 6460 level from? Where is this level from? This level is from our previous after hours all-time high. This is the level I don't really like, but it is holding, right? You're seeing the first step of demand begin to maintain. Go back to SPY for a second, right? On SPY's chart, now my big head's not blocking everything, right? Look at the SPY chart. Look at what we're holding right now. Is it a coincidence that we're bouncing at 641.50? No, it's not. This is the after hours all-time highs. So we are still holding a critical demand zone today. We're not breaking anything of any importance. 641.50 is our first demand. Our second demand is between here, and that's all I have today's session. Let's see if we can pull back to these levels and formulate some long ideas off of it for continuation trades higher. Because again, markets moved us lower, but only back into demand zones. Okay. On the QQQ chart, where are the Qs trading at this morning? QQQ yesterday. I mean, wow. I don't even want to talk about yesterday. I want to talk about today. Look at what's going on here in the Qs. The reason why SPY is bouncing is probably mostly because of the QQQ chart. Look at what's going on here. You can see we have our previous highs here, 576 to 577. You can see the all-time high here, the previous all-time high here, the after hours all-time high. We then produced a new all-time high here again at the same exact level Monday, August the 11th. We are now seeing a beautiful break and retest pullback long to our key demand zone for upside trades. I am not a perma bull. Let's understand that and let's get that straight. I am not a perma bull, but when I see levels reacting, I like it for longs. When I see levels breaking, I like it for shorts. As of right now, we are seeing this maintain, and this is our reasoning to look for long opportunities today. If we see us fail back below 576, this yellow zone right here, or my red drawing, then I know that we're going to go back lower, and we're going to go back lower into 572. That's what I'm seeing today. I see demand right here, and I'm seeing reaction off demand zone. If I were trading Qs right now in the pre-market session, I would be all over this chart. I would be all over this. I'd be longing right there, looking for a move back into 580. I'd be doing this right now. But of course, this is happening pre-market, so it's obviously a bit early. We can't do that, and the market's not even open yet. So let's be aware that the market is responding off demand, and let's look to see if we can formulate another long idea off of this demand zone, or if we do fail below it, we flip short and look for downside moves. That's what it's all about today's session here on Qs, on ES, and SPY, okay? That being said, let's move on, guys. I want to go over to our individual tickers. And first of all, I want to say we have a lot of people here this morning. We have over 1,200 people here this morning with 455 likes. Guys, get the like count up, please. It's the only thing I ask for. I don't ask for anything but that. Let's get the like count up to at least 500. That's my goal every day, okay? So, yes, and 576 Express is PM low, exactly. So you're seeing reactions off key demand zones. We know, okay, this is so obvious, right? We know we're bullish and we know we're bearish, right? We're seeing our reactions off our demand zones. It's just simply PM low now. That's going to be our defining factor on Qs and tech, whether we are bullish or bearish. I think that's the most obvious thing this morning, okay? That being said, let me relax for a minute. Let me get some water, hydration, and then we'll jump into our charts. Okay. All right. So, the first ticker of today's session, Nvidia. This is the most clear picture of today's session. This is the storybook of how today's going to pan out, okay? Is today going to be the day where we see aggressive downside? And it's going to be a day where we move back to our next key demand zone? Or is today going to be the day we just rally and rip back higher again to new all-time highs? It's going to be defined by, in my opinion, what Nvidia does, okay? Nvidia has been in channel for a few days in a row. You've seen it, right? You've seen reaction off lows, reaction off lows, reaction off lows, reaction off lows. You've seen reaction off highs, reaction off highs, reaction off highs, reaction off highs, and reaction off highs. Basically, you have a supply high and a demand low where a stock is in a very beautiful consolidation. Now, as you guys know, what happens here is you have a lot of buyer interest here at the lows and a lot of short interest here at the highs. That's what happens when you develop channels like this. Now, what's going to happen when the channel breaks down under this level? Under 180, under 179, under 179.5, what's going to happen to all those buyers that have been buying the dip the past few times in a row? They bought it once and twice and 3 and 4 and 5 times. What's going to happen when they break out? Well, when they break down under this level. If they break down under this level, then we see downside the market. So for me this morning, a key factor of what happens today's session is going to be what's going on with Nvidia. Is Nvidia under 179.5? If we do break under 179.5, I think we see the downside move and the move lower in the market, right back to 176. If Nvidia again bounces off the support zone and we move higher and we break above 184, this is the best possible long entry and the move higher in the market is anticipated. Watch to see what happens with Nvidia today because Nvidia is in equal highs, in equal low territory, and it's going to make a big move. I think it's probably going to make a move either today or it's going to be tomorrow. It's got to be. I think it's going to be one of the days. Obviously, I'm kind of like I shouldn't really be forecasting like that. But if I am a forecaster, if I am a bettor, I would bet that it's going to break one of these days. Again, though, don't be a bettor. Let's wait for this to break out. If it can break above highs, upside, or break below lows, downside back to 176. Okay, that's Nvidia's chart. Watch the video because it's going to be an important player today's session. AMD is bullish. AMD is not in equal high, equal low territory, right? AMD is bullish as long as it's above these previous highs, and this break at level from yesterday's session. Yesterday on AMD was all about 180. If you just traded with 180 yesterday, the key level that we spoke about pre-market, you probably had a good time. Even after live trading, I posted in the day trades tab so you guys could see it to trade off 180 if you guys wanted more trades. And that sort of idea worked out really well. When I posted the idea, the chart had already reacted off of 180, already moved a little bit higher off of it, but it gave you the confirmation you needed to see in order for you to go long. At that point, it was already at this price. All you have to do is look for a long entry right there with the stop loss underneath these lows and look for upside back in highs. This was a nice trade yesterday in AMD. But again, what made it a nice trade? What made it a nice trade was that we pulled back to a demand zone, a level, and we reacted off of it. Now, what's going on today with AMD? AMD is back at the same demand zone, And what I would look for today's session is I would look to see, can we see another reaction off 180? If we see another reaction off 180, a little bit of maybe a wham today, then I'd look for upside here and a move higher. But if we fail below 180 today, if you see this type of action happen today, right? Then similar to Nvidia, this is going to move down lower. So for today's session, watch to see how we respond to 180. 180 is our key bull bear pivot. Right now, we're bullish. And I would even argue you don't want to make it just 180. I would say use it all the way down to these Monday's highs. Monday's highs is 179. So you don't really want to be short an AMB today unless you see us back under 179. If you somehow get underneath these lows, right, then you turn these lows and these highs back into resistance, then we can look for downside of the market. So keep an eye on AMD today. If we're above this zone, we're bullish, and I would say let's look for longs back at this area for an upside trade. If we're below this level, look for shorts and move down lower. Okay, that's AMD. Keep an eye on AMD today, right? SMH. On the SMH chart, SMH is pulling back to some key demand. The first demand zone to watch out for in SMH is simply just 296.50. It is simply that Monday's highs. You want to see this level hold for upside continuation, right? 296.50 is your big hold spot. Can it hold? If it does, that is your position today, right? Look to see if we can maintain this level. If you see us back under 296.50, then obviously we're failing back to that golden level, back into this 293 area here on SMH. Okay, quick flash of MU. MU downside under 126. I don't really see any trades here. I just like to look at it sometimes and see what's going on here. But these are my levels. Okay, moving on. Avgo, same idea with Avgo. Avgo, a little bit dangerous here in Avgo. Right? This could be a little bit of a dangerous little upside break and failure underneath the level. The previous all-time highs here, 310 was your key pivot. I believe that's all-time highs, right? That is all-time highs, I believe, right? Yes, it is. So previous all-time highs here, 310. We're back under 310. Your bull bear pivot on Avgo is 310. No trade here. I'm not watching a trade here. I'm just doing this with you guys live. But if we are under 310, this is not looking good, right? I would actually look for shorts back under 303. If it loses 303, look for puts and then move down lower back into these lows here, 91 to 92, okay? Amazon. Amazon is interesting because Amazon is doing what we wanted it to do, right? Amazon is maintaining. Look, this is kind of the idea we spoke about a few days ago about this holding and just, you know, having a stop underneath and it maintained it, right? It did everything it needed to do to maintain it. At this point, what should you be doing on Amazon? Did anybody take Amazon? Did anybody take a little position in Amazon and maybe run a little equity trade here? Because this was the equity trade idea we spoke about, and it's beginning to result in something. Okay, you're seeing obviously your stop was probably 219, your entry was probably somewhere around 222, so your risk was about $2, and it's already moved to this point $4.50. At this point, you probably want to take profit. Okay, take profit and move stops up. I would now use 222 as your new stop loss and look for this to build higher. Where must it go now for us to get that further upside move? At this point, it really comes down to 226. Okay, 226 is that Thursday's highs. 226 is that of course that pre-market highs from Thursday this morning. If I'm looking for any continuation upside trades on Amazon today with a strong market, and again, to be honest with you, this has to be in a strong market. If I see SPY strong today, then hell yeah, trade Amazon. If I see SPY's weak today, then maybe be careful trading Amazon and just kind of maintain and do some maintenance in your positions here. But for Amazon this morning, if you want to see more upside here, you want to see us back above 226. And of course, you still have gap fill, guys. There is still gap fill potential here. Let's not forget Amazon is in gap fill territory. Where is the gap fill on Amazon? Above 226, above 226 now, we have upside back into 231.5. So there is still $6 of upside continuation above that 226 level going into today's session. So keep this in the back burner, right? Don't forget about it. Don't forget about Amazon. This is a stock to watch for longs today if the market is hot, okay? That being said, hopefully this works out. I want to see gap fill for you guys. That would be the best possible scenario, okay? Moving on, Apple. On the Apple chart, Apple yesterday, interesting as well. Okay, interesting as well. Why was Apple interesting? Apple was interesting because it held above 230. Okay, 230 was your long spot yesterday in Apple. Off the gate yesterday in the almost at 9:35 in the morning, you had to go long here because you see us breaking and holding above our Tuesday's highs, and today's session, it's nothing different. Okay, if I'm watching for anything today here on the Apple chart, I would be watching to see, can Apple maintain 230? If you see us pull back to this 230, that's your long spot. Okay, look for some continuation. Look for reversal trades here at 230. If we hold the level, look for longs there. If you see us back under 230, this likely fades back into 225, which is our next key demand zone. Okay, so right now, 230 is your big bull bear pivot. If you hold 230, back into 237. If you lose 230, back into 225, right? Let's move on. Let's go on to the next ticker. Let's go over Meta. On the Meta chart, Meta is dangerous, okay? This is dangerous because think of it like this, okay? If you were long Meta above 784, if you were long Meta yesterday, because we spoke about this, because even yesterday, what did I say yesterday about Meta? I said, guys, yesterday Meta broke out above 784. If I was a trader in Meta, I would look for longs here at 784. This is what I said verbatim yesterday. What happened to Meta at 784? Look at what happened here at Meta 784. Zoom into the chart. Go to the 2-minute. You see a hold here at 784, and then bam, right back underneath. What does this mean today? This means today that every buyer who bought over here, every buyer that bought over there, what are they going to be feeling today? They're feeling the burn right now, okay? This is a wham-wham in the opposite direction, right? This, to me, means trap buyers. I don't like this on Meta today, transparently. I'm not a big Meta trader, but I'll tell you guys this. As long as Meta is under 784, it's probably going to move back lower into 761. That's where I think this goes to. Why? Because of a trap buyer scenario, and it moves down lower because of that trap buyer scenario. Of course, if market rallies today, then maybe Meta goes higher. But again, as long as it's under 784, it's still bearish. And for me, this is a bear chart going into this Thursday morning, right? Tesla, you guys thought I was going to forget about Tesla. I'm not going to forget about Tesla. I forget about Tesla all the time. Okay, Tesla. So Tesla yesterday, 338 was your key pivot. You see upside, downside, upside, downside, upside, downside. Here on Tesla, it is a little bit of a tricky chart. Okay, why I say that? Because we've just been sort of channeling. You're seeing this is a common theme recently on some of these beta names. Tesla's been in a channel. It's not been hot recently. The market's not been hot. Yesterday, the market was not hot. Today on Tesla, I would keep an eye at 330, 330, 330. It's your key demand. If it can pull back to 330, that's my long spot. Okay, if you lose 330, then back in 318. But as of right now, 330 is your big demand zone. Let's watch 330 to hold, right? 330 is your key pivot to watch out for today's session. Let's not misconstrue that, right? If you do get back above 346 and change, if you get back above this Wednesday high, this Tuesday high, and this Monday high, then obviously upside, right? But right now we're seeing a breakdown under 338. I think we probably move back into 330 if I were to guess here. And where I'd be looking for longs is back at 330. If I see us maintain 330, look for upside. If we lose 330, back in 319, okay? Moving on, guys, let's go over a few more tickers. As you guys know, I go over tickers that I don't plan to trade sometimes. Like Tesla, I'm probably not going to trade this, but I'm going over it because it's important to get a recap of the levels and sometimes understand where you would trade it, okay? PLTR. PLTR is seeing the first sign of downside, okay? And this is probably what you want to see for PLTR shorts. You see a high produced here and a high produced here, a little double top high. But where does the pressure increase? Because right now, if I'm a bull, I'm not pressured right now. I'm not pressured at all. The pressure increases under 178. If I see us break under Thursday's lows here, August 7th, Thursday's lows here, then the pressure increases. And I can look for a real downside back into these lows. And I would argue this is probably 90% chance or 80% chance of happening. So look for 178 to break down. If it breaks, then this is going to get a free-flowing downside move back into these lows here. Okay, that's it. This is your good sign for shorts here in PLTR, and this is probably what you need. But you need to see more. Okay? You need to see more than that. You want to see us back under 178 because as of right now, this is some sign of weakness, but it's not. There's no power behind it, right? You need power behind the weakness to get those longs to stop out. Okay. That being said, UNH. Yes, let's go over UNH. First of all, Joshua, thank you very much, Joshua. Very much, thank you. Also, Joshua, again, thank you. Two thank yous to Joshua, both for Meta and PLTR and Tesla and UNH. Let's do UNH. So, okay, what's going on here, UNH? This is the last ticker today's session. UNH is, okay, so first of all, your key level is still here, right? Let's not confuse this. Your key level is still at that 302 to 295 area. And the reason why it's key, if I recall, is because it's that daily demand back below. Now, you did see us find support here at 234. Now, where's that 234 coming from? It's hard to say. But at this point here on UNH, it probably does move higher back into that 295, 300 area. But in order for us to see real upside, you need to see this happen, right? You need to see us back above these levels over here for more upside to come in the market, right? And that's just simply what it is. And I know it's far away. I know you're probably wondering, how is this any value to you? But that's what it is. This is the hold spot, the hold spot, the hold spot level you must retain. And we are still underneath that level. Sure, you're seeing some reversion off demand here, but you need to see us back above 302 for this upside to really persist. Okay, so back above 302 would give us the more of a free-flowing move back into these highs over here, right? Guys, thank you all for joining in. Much appreciated, everyone. Let's have a good day today, right? Obviously, market's a little bit looking a little bit feisty this morning, so let's see what happens. Trade safe, trade smart, and I'll see you guys all for live trading. Bye, guys.